Trade recap. Boom. Let's fucking jump into it right away. We're not wasting any time today. Okay, 1 hour on NQ. This is what we're looking at here. We started the day over here, choppy. We were moving down slow. It was choppy though. First thing we do in the morning, check the Asian open, check midnight open. So general rule of thumb, if midnight open is higher than 1800 open, you want to be bearish. If it's lower than 1800 open, you're looking bullish. This is a different case. This is a different sort of case today because it was higher, but we were still looking bearish. And the reason for that was because price was under both of these, and it was under these lows that we took over here. This was our sell side that we took. And because we were under the sell side and because we were under both of our opens, I was looking bullish. I was just waiting for my macro and I was looking for my entry model. So we trade market maker buy and sell model. Let's just jump right into the 1 minute, show you what I saw. During our expansion macro, after market open, here's 9:30 open, chopped around a bunch. If we look at ES during this open, we can see that price actually expanded a lot more during our macro time. This was my liquidity sweep. And I'll tell you why I'm using that as the liquidity sweep. So obviously we made some significant lows and then ran higher. If you take the 15 minute and you look at this large wick that we have right here, you can actually see that price rejected off of this wick consequent encroachment perfectly. Look at the close and the open of that candle on this wick CE. Can't make that shit up. So I saw this as a pretty strong bullish rejection. It's basically a rejection block rejection, but off the wick CE. So I was looking for some bit of SMT coming in because that was our liquidity sweep. So second on the checklist is SMT. So coming in here during our 956 lows right here. Lower low made on ES, but looking at on fucking NQ, we actually made higher highs. So we had this big breakout of our consolidation zone here. My consolidation zone was pretty much kind of just from this level to this level right here. Nothing real specific about it, but we broke higher and closed out of it. You can see we tried to break out of it here, but we did not. Then we closed out of it, so I was like, okay, so we want to move higher, right? So looking for confluences to move higher. If you see here, there's no real fair value gap. I like to go fair value gap entry, but I didn't see a fair value gap. So we were just playing order blocks for now. So I saw my order block entry. I knew we wanted to go bullish. That's what I was looking for. We had our SMT. We're looking for our entry now. Boom, bullish off this order block. What did I do? Limit order on top of the order block. Took that entry, protecting these lows from the order block. And obviously, we had our Judah swing highs. That was our first target. Which is actually where I sold out fully my contract. So this was my entire play right here. A little 2.5 to 1 play. This Rick, who the fuck is Rick? Risk size here that we had. I was, based on my 50K account, I was only able to get one contract into the market here. So I only had one contract, so I sold out my entire play at TP1. It's okay to sell out your whole plate and leave profit on the table if you only have one contract. You want to secure that profit. At every imbalance or level of liquidity that we take out, price could SMT and reverse and go lower. You do not want to sit and try to milk as much as you can out of it just to watch your play come all the way back down and stop me out. Because it could have done that. It very well could have. At every liquidity level, price can come down. Definitely looking for to take out Asian highs. If we scale here to the 15 minute, I'll show you exactly what my target was for today. Boom. We had these significant highs up here. That was a good target to have. But really what I was looking for here were these Asian highs. Because these Asian highs took out this short-term liquidity. So this is a high liquidity target right here because we took out liquidity, so there's a shit ton of buy stops here on our false breakout move higher. We had this big 1 hour imbalance. That would have been my final runner scale out there. So went long off that order block, targeting the 930 Judah swing highs. My second contract of what I got out at our pre-market highs, or my final scale out to be obviously at Asian highs up here. Realistically though, while I was in this trade, I could and I should have scaled into a second contract. Price was kind of bouncing off this imbalance, which is what we had, why we came down here. So we made this imbalance, came back up, rejected a little lower into the order block before we really started moving up. And you'll notice we move up right as we get into this 1020 time frame. You'll notice about 10 minutes after macro timing ends, that's when you'll get heavy volatility into the market in the direction of the reverse. But we had this 3-minute imbalance right here, the best area to scale in another entry and then move my stop up to these new recent lows. But I simply didn't because kind of waiting for a retrace back down to like come retest this zone before we actually moved up. Like I want to see something like this. But obviously that doesn't always happen. We're in this 10-20 area where we're going to get very heavy expansion. So I should have realized that, and I should have just entered as soon as we had that candle close through. Hindsight is 2020 though. Hindsight is 2020. Don't compact your entire trading journey into one day, because that's when you start revenge trading. That's when you start getting angry. That's when you start going back into the market after you've already made money, and then you lose that money that you made. Why would you do that? That's just dumb. Standard deviation projection off of our S&T move and off of our lower sweep. So this is just further confirmation in my play that I had right here. Boom. Above London highs was the standard deviation level that we were looking for. And then even if you look at the S&T swing that we had, our target where we started to reaccumulate right here, 2.5 standard deviation level. Where did we finish our trading lunch hour? Boom, inside the 4 to 3. So price does exactly what you would think it do if you use standard deviations. Standard deviations are the shit. One more thing I was going to talk about is potential scale and entries that were available here. At this 1-minute imbalance right here, that would have been a decent scale and entry. We were getting close to the equilibrium level of our overall move. So that was the only reason that, yeah, see, that is right at equilibrium, if not right a little bit of above. So a little bit of a dangerous entry there, especially since we just took out some liquidity. But ES had not yet taken out 930 Judas swing highs at this point. So it was still all right. Like it was somewhere around here. We hadn't taken out our pre-market highs yet. Also created this order block too, off of these candles, which created this large displacement leg up, rejecting that order block. This is another potential entry spot, but you're reaching another level of liquidity getting swept. Very risky entries up here, I'm not gonna lie. They're possible, but very risky. The only reason that I would have taken these is because ES did not yet take out these London highs, so we were waiting for the rebalance of price to get up higher. Plus, we definitely already had made low of day during London session, so I would be confident that price would be going higher. And obviously, once Asia highs were taken and we were in that 1 hour imbalance, you're way too high in the premium that I would not take any trades up there. It's not worth it. I didn't check anything PM session, but that is my trade recap from today. We'll be back tomorrow. Hopefully, we're going to print. I'll catch you all in the next one.